Have you ever wondered how the stock market actually works? You've probably heard people saying things like, I'm investing in stocks, or someone else saying, I just turned $1 into $20 or $40, whatever it may be. But when you look at the stock market, all you see is random numbers on a screen. If you see random numbers on a screen, today I'll breaking it down in a very simple way for you to understand. No fancy words, no complicated charts, just a clear and simple way to understand how stocks work, why prices of things change, and how people make money or lose money in the stock market. So whether you want to start investing or just sound smart in conversations, stick around till the end of the video because the last point is the most important one. So, what is the stock market? Let's just start with the basics. The stock market is basically a giant online store, except instead of buying shoes or video games, people buy tiny pieces of companies. When you buy a stock, you're buying a share of a company, which technically means you own a small part of the company. If the company does well, your stock goes up. If it flops, well, let's just say your investment might turn into monopoly money. The biggest places where stocks are traded are the stock exchanges like the New York Stock Exchange. This is home to massive companies like Apple and Coca-Cola. Another big one is the NASDAQ. This is where all the tech giants are, like Google and Tesla. Another one, this is the biggest one for Canada, is the Toronto Stock Exchange, which is Canada's main exchange with big banks and resource companies. We have millions of people who buy and sell stocks every day. Some are regular people just like you and me. Others are big institutions. And some are just super fast AI trading bots that don't even sleep. How do stock prices change? Okay, so why do stock prices move up and move down? The simple answer is supply and demand. If more people want to buy a stock, the price goes up because it's in high demand. If more people want to sell a stock, the price goes down because nobody wants it. Think of it like sneakers. If everyone wants a rare pair of Jordans, the price for it skyrockets. But if nobody cares, they sit on the shelf and get discounted. You're probably wondering to yourself, what makes people want to buy or sell stocks? There are four main things that make people want to buy or sell stocks. The first one is company performance. If a company makes a big profit, investors want in. If they lose money, people jump the ship. The second one is news and trends. One bad tweet from a CEO and the stock price can crash. One good announcement and it can skyrocket. The third one is the economy. If people feel rich, they invest more. If a recession hits, they panic sell. And the fourth one is investor emotions. Fear and greed control a lot of people's and what happens in the stock market. Have you ever seen someone panic sell at the worst time? Yep, that happens a lot in the stock market. If you've been paying attention, you've heard a lot of stock market this, stock market that, but how do people actually make money from the stock market? Well, there are two main ways people make money from the stock market. The first one is they buy low and sell high. That's the classic move. Buying a stock for cheap, waiting for it to go up, then selling for a profit. That sounds pretty easy, right? Well, predicting stock prices is way harder than it looks. The second one is dividends. Some companies pay their shareholders a small amount of cash every few months, just for owning their stocks. Think of it like passive income, except you still have to hold onto the stock to get paid. Some people invest for long term, buying stocks and holding them for years. Others trade daily, trying to make small profits from price changes. One is less stressful, the other might give you gray hair before you're 30. You take a guess which one is that, and we haven't talked about the risks yet, so now let's talk about how not to go broke. Before you think to yourself, wow, I should just put all of my money into the stocks, let's talk about the risks first. A quick reminder, stocks go up and they also come tumbling down. Sometimes stocks crash, like really bad. If you invest without knowing what you're doing, you might lose all your money. Some companies look good but they flop. Looking at you, blockbusters. The stock market is not a get-rich-quick scheme. If it were, everyone would be rich, so stop thinking of it like that. Now, this is the most important point I told you to stay tuned for, which is how do you not lose all your money? I'll break it down to you in 3 simple steps. The first one is diversity. Don't put all your money into one stock, spread it across different companies and industries. Number 2 is think long term. Short term trading is risky. The real wealth comes from holding good stocks over time. And number 3 is don't invest money you can't afford to lose. If losing your investment would ruin your life, invest less. How do you start investing? Let me break it down in 4 very simple ways. Number 1 is open a brokerage account. Number 2, start small. You don't need thousands of dollars. $50 is good enough. Number 3, do your research. Look at companies' financial track and record before buying. Number 4, be patient. When you invest, you're playing the long game. If you're trying to get it quick, you're just gambling. And a quick tip is don't buy stocks just because everyone else is, because a lot of people hype up stocks that tumble down. You've reached the end of the video. If you found this video helpful, leave a like and subscribe and drop a comment below on what's one thing about the stock market that confuses you, and I'll try to answer it in the next video. Thank you for watching, and I'll see you in the next one.